All right, folks, good afternoon. Good afternoon. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. It's generally the same. Oh, I needed to take out this base. I'm not in base anymore. Got out of that into the news move and got to my target. That was a good one. Generally the same. Put some Palantir options positions really to hedge my short a little bit with the earnings report being on Monday. I started to put some on today. Just small, just trying to do the math on how hedged I want to be, what I want to have, what I'm willing to give up, all that fun stuff. Probably size up on that a little bit more tomorrow. So let's jump on in. Apologies again about yesterday. You know, my internet dropped between the close and 4:10, and then there was a lot of stuff going on with my positions, and I was trading off of a hotspot on my phone that wasn't working great, so I had to cancel the afternoon meeting yesterday, really last minute. Sorry about that. And then today is Amazon and Apple. So traditionally, on the Apple earnings day, I used to always cancel the afternoon meeting. Once a quarter, I would cancel it on the Apple day, so that I could focus on trading it. There was a long time when I always held an Apple position into the report, and whether I did hold it into the report or not, I almost always traded it after the report. So I used to always cancel this afternoon meeting. But I feel like the last handful of earnings reports from Apple have actually been pretty boring. Price action's been pretty boring. The movements have been pretty muted. So, we've kind of transitioned into like doing an afternoon meeting, but not really a traditional one. Sometimes I cut out the Q&A because we'll certainly want to watch Apple at 4:30 when the numbers hit. It tends to be the largest or second largest market cap company in the NASDAQ, so it's got a really big impact on pretty much everything. And this is going to be an interesting report as well with everything that's going on with Apple transitioning its U.S. production out of China into India. It's going to be curious to see what the China numbers actually even look like, because China sales have been very important for Apple's earnings in the past. So I got that one in 15 minutes. So I'm going to do kind of an abbreviated afternoon meeting here for these next 15 minutes. If I can, I'll answer questions. If not, I'll just try to postpone those questions till next time. But let's jump in on the meat of our meeting. So it was a pretty boring. I don't know. It was a pretty boring midday session, I would say, from noon until the MOCs hit. It was really a very boring session. The opening price action was interesting, and the biggest move, somewhat annoyingly if you asked me, because at that point I was already to the last 10 minutes. I'm so short that into the last 10 minutes I was focused more on really just kind of reducing risk than I was making profit on this move. So I was a little bit annoyed. Actually, it was a big boost to my P&L, this downtick in the last 10 minutes, and then Amazon missing helped a little bit as well, but I was a little bit annoyed on that. Actually, while I'm chatting here, let's take a quick look at some of these earnings that are out. How am I looking at the market if I haven't even reviewed the Amazon earnings with you guys yet? So Amazon taking a little bit of a hit. I haven't even really looked at the numbers yet. I just kind of heard Pat talking about them. Amazon sees second quarter operating income $13 billion to $17.5 billion versus estimates of $17.82 billion. So that second quarter operating income guidance miss is nasty, and I'm surprised actually that it's trading as well as it is. Looks like we immediately had a $10 drop in Amazon. Now we've popped back $6-7. That's not a good looking guidance number. It's not what you want to see. AWS net sales XFX mainly in line for Q1. Operating margins were a beat on Q1. I always like to see those margin numbers come in solid. EPS was a beat. AWS was a miss. AWS net sales was a miss in Q1. Net sales themselves, though, were a beat. Second quarter net sales guidance is kind of a little bit of a in line, maybe a little bit of a beat on the midpoint of the estimates. So that's probably helping a little bit. So the second quarter operating income is a huge miss, but the second quarter net sales guidance is like a little bit of a beat if you use the midpoint of what Amazon's telling us here, the 159 to 164 billion. So yeah, so the Amazon numbers. I mean that second quarter operating income miss is really nasty. The rest of it seems okay, nothing too special. We got Airbnb out here after the close. Airbnb trading down. Their guidance, second quarter revenue guidance is pretty in line, honestly. Very very small miss maybe. On the range. Q1 EPS beats, adjusted EBITDA beats, rev beats, gross bookings beat small. This Airbnb seems fine. Like, nothing to be excited about, but nothing to be excited about really in either direction, to be totally honest. We got Block out. They still go by the symbol Square. I don't even know what their symbol is anymore. It's not BLK, is it? It's BlackRock, obviously. I don't even remember what the block symbol is anymore, so I guess I'm not looking at that one. XYZ is so stupid. If Robert's listening in the YouTube, some classic Jack Dorsey action. XYZ, get the hell out of here. Oh man, who do I dislike more, Jack Dorsey or the Snap CEO, Evan Spiegel? It's hard to say. I think they're both terrible. Reddit's a monster. I'm such a fan of this company. I have no position in it. This is one of my favorite names, even though I have no position in it. My favorite names that I probably have no position in is Reddit and Microsoft are my favorite two. Not surprised at all. Reddit has so much growth potential. Second quarter guidance is a huge beat on Reddit revenue guidance. Daily active users for Q1 was a beat. Q1 revenue was a beat. Net income. Wow, net income was a massive beat. Q1 adjusted EBITDA is a massive beat. Let's go Reddit. Reddit's the truth. Yeah, that second quarter revenue guidance from Reddit is phenomenal. What about Elon? Honestly, up until recently, I thought that Elon's been a phenomenal CEO for Tesla. Whether I like him or dislike him is besides the point. If you're asking me whether or not I think he's a good CEO, he's a storyteller, and that's what a CEO should be. And he has enabled Tesla, even to this day, even with the amount that Tesla's come down, he has enabled Tesla to trade at a incredible multiple. But then recently I think he kind of lost his mind. I don't know what he's doing. He's imploding his company. He's destroying the brand. But up until recently, Elon's been a phenomenal CEO, one of the best out there. If you think about what he's been able to do and how he was able to take that company Tesla that no one believed in, no one thought could ever become profitable, could ever reach the production masses that it has, he did it, and he told the story all the way through. He probably should have been kicked out as a CEO a long time ago by the SEC, but that's more an opinion than anything based on, he broke, in my opinion, some major securities laws that most people probably would have gotten in trouble for. If I started writing on, I don't know, T3 Live's Twitter as an example that Tesla is getting bought out at $420 when it's trading at $280 and everybody believes me and the stock rips, the SEC is probably going to take my license away and it'll be the last you guys ever hear from me. But if Elon, who's the CEO of the company, does it, no big deal. Yeah, anyway, Jack Dorsey, not a fan. Evan Spiegel, not a fan. I just don't think these guys do a good job. That's really what I'm judging them on. Yes, yeah, that came out last night. So it came out last night. I guess that was a rumor that Elon was getting booted by the board. And if you know the board at Tesla, there is no way that is happening. This is the most neutered board. They just acquiesce to literally any and everything that Elon says. Otherwise, they would have clamped down on some of his antics a long, long time ago. I think on some of the 24-hour trading platforms, Tesla took a really big hit on that. Which again, as much as I think that Elon has become Tesla's own worst enemy recently. As long as Tesla's recently, as much as I think that Elon has become Tesla's worst enemy and has really hurt that story of the stock that has held it up so well, the stock would get smoked if he was gone, because it still trades at an insane multiple specifically because of him. And I think that's what we saw a little bit in the over hours trading. But by the time the pre-market was around this morning, it was all the way back up because the board denied it. That came from the Wall Street Journal too. I don't know what is going on with the Wall Street Journal recently. It's really disappointing to see that. Anyway, we got 5 minutes to the open. So the market was up huge at certain points today, primarily off of Microsoft and Meta. So, we had this huge boost in the close, and again, apologies I couldn't do an afternoon meeting yesterday. We had this huge boost into the close on the pension rebalance and the MOCs. And from my experience, when we see that at the end of the month, and we've certainly seen it before, or at the end of the quarter or whatever, almost always, I'm going to say 90% of the time, you actually get a gap down the next day. But in this case, we had that huge rip, and then it was immediately followed on by Meta and Microsoft, who both reported great earnings, particularly that Microsoft earnings I thought was phenomenal. Absolutely love the company, love the CEO, love what they're doing over there. Really, really good report. And that, just further boosted the market late after hours yesterday, and we gapped up big this morning. And off the open, so one of the things I really wanted to see as well is we know that this market has had this huge underlying bid to it. We know where it's coming from, right? It's coming from multiple sources. It's coming from the CTAs. It's coming from the vol control funds. Well, starting next week, we're going to get the bid in from the vol control funds as well. I think that they might, depending on the tape and the realized vol and all that stuff, you might be seeing $3 billion plus a day of buying from vol control alone over the course of the next 2 weeks. So that I think will begin to pick up in earnest Monday, Tuesday next week. So far we've had the CTAs. We haven't even turned on the vol control funds yet. We, I think also the pension fund rebalance had been impacting this market a little bit into the end of the month, and obviously particularly yesterday. So I was curious that now that we got through that pension rebalance, if we were going to see some of the infinite bid of the market disappear today or not. And initially in the beginning of the day, it was hopeful. I was liking the opening price action. I was not afraid by this new high that came in, and I was loving the sell-off that was starting at 955 that brought us to new lows, even if it was only a retracement to the ADMA, and that's where you want to see if we get supported. And then we actually had a decent ISM number come out at 10 o'clock that helped bounce us off this ADMA, and then it seemed like this endless, never-ending bid was kind of coming back. But what I was saying to you guys when I was getting off the radio at 11 o'clock was I did not think that this was going to be one of those grindy uptrends that was going to last all day. I mean, this is a day 8 to the upside, and we did close green. So now we've got 8 positive days in a row. We were at extreme extension to the upside versus the ADMA. Short-term tactical closed barely outside the red, but into the gap up, was back in the red. There's just a lot of reasons to, I think, believe that underlying bid to this market was not going to be able to last. And at the same time, for me, technically, we're finally in the 560 to 570 zone, which is the area where I've really wanted to, turn net short with my kind of portfolio of names and how I'm managing them. Just a little bit over a week ago on this Monday, I had only longs on. I was 100% longs. I've had a game plan of piecing in, piecing out that I've spoken about a lot. We're in the move higher. I am piecing out of those longs. At a certain point, I'm beginning to piece into shorts. And then finally, a couple trading sessions ago, I started to get a little bit more, a little bit net short actually for the first time. And then it was after hours into this morning where I actually started to get very net short. And I am still leaving room to be able to continue to build in into 570, 573 on the upside, because I think the positioning squeeze is possible, especially if we get a good Apple report, which we're going to find out in about 1 minute, and a good economic number tomorrow morning. It's not impossible for the squeeze, honestly, to further continue. But the more it moves up, the more I like the fade. It seems like the option skew is increasing again as well, and people are getting forced in on their buys, and that actually is something that can enable the market to be able to go down at a certain point. But it will, if we were to trade down, it'll trade down with a decent underlying bid from vol control and CTAs and buybacks still. So I'm growing more and more neutral here, but I'm also waiting to see the impact of these economic numbers, which I think are going to continue to worsen as we get through the summer. So I would look towards like May OPEX to see if that can become a trigger where we get through 2 weeks of all control buying that can then really maybe catalyze us more to the downside, as an example, or at certain points throughout the summer if we see some worsening economic numbers. All right, we got 10 seconds to Apple here. Let's see what it looks like. What's going on, Apple? It's out. Apple's out. So like a quick uptick followed by a downtick. There we go. Apple now trading down. Apple board authorized buyback of up to $100 billion of the company's stock. Well, that'll help cushion the downside. Greater China revenue is a miss. Services revenue is a miss. Apple second quarter revenue meets estimates. EPS is a small beat. Second quarter product revenue is a miss. Yeah, small miss on that second quarter revenue number. Wearables is a miss. Mac revenues beat. Okay. Total operating expenses, iPhone revenue. So the big ones here, I think, are the Greater China revenue missing, 16 billion versus 16.83 billion expected, and the services revenue. Services revenue, 26.65 billion versus estimates of 26.72 billion. It's a very, very small miss, but I think it's notable. The services revenue is a big part of what Apple does, and that type of revenue tends to be like high multiple revenue. So it can really create positive impacts on Apple's overall multiple. So the numbers here from Apple don't look great, but guess what? Apple is going to buy back an additional $1 billion worth of their stock. Do you want to be short Apple when they are going to be buying back? I think that their current buyback authorization was almost fully unwound. So as I'm talking about this out loud, I remember last quarter the market was expecting a new buyback authorization. I think that they might have even have said we're going to do it next quarter. So this might have been expected. I don't know if the number was expected, but the degree of the Apple buyback just consistently absolutely blows my mind, and it makes it like the most impossible stock ever to be short. Even if the company's fundamentals are deteriorating or it's a little bit expensive or whatever, you are literally fighting a bid of $100 billion in Apple. And the cheaper the stock, the more it goes down, the more the amount of shares that they actually buy, right? Just completely wild. So EPS sets March quarter record. Services revenue reaches a new all-time high. Really impressive. that they're breaking records here, but they didn't. Those records didn't meet the expectations. So, um, stock is getting hit down a little bit here, as it probably should. If it wasn't for that $100 billion buyback number, it probably would be down a little bit more. And again, the cheaper the thing goes, the more the amount of shares that they buy. I mean, just incredible, just incredible. All right, I'm not really planning on trading this Apple report, so I'll kind of move ahead with a more normal afternoon meeting. Can keep an eye on it, obviously, but I'm not going to trade it. What's Amazon doing at the moment? Amazon's stabilizing a little bit. What are the Qs doing? Qs are trading down, but they're off their after hours low. All right. Well, that's exciting. Okay, so what was I talking about before Apple reported? I think I was just talking about the approach to the market and my concern on the economic numbers as we go into higher prices. And I mean, look, we had been looking for and calling for a positioning squeeze, and we couldn't have been more accurate. That positioning squeeze is happening in the face of macro uncertainty, a lot of macroeconomic bearishness, a lot of uncertainty, whether it leads to a good outcome or a bad outcome in the long run. A lot of uncertainty that's coming from the White House, and we know that markets don't like uncertainty. Yet we have been able to have just the most incredible upside move from 510 to today's high of like 564, with just an incredible underlying bid to it. And I like the idea of being short as we get into this 560, 573 area, but also, I think that the market isn't going to crash down in the early part of May, just because there's just too much systematic buying that's going to be still happening. Doesn't mean we can't pull back. Doesn't mean we can't go down. I just don't think that we're going to crash down right now, unless a new insane headline comes out that I'm not expecting. So it's kind of where it's at. Again, from an intraday trading perspective, we had that bid, but I didn't think it was going to last, so we did get the rollover. But coming at noon, it just got really boring until into the close. And I think that pretty much covers it. I didn't just add to shorts and start some new shorts yesterday and today, but I also took off more of my longs as well, and that combo had me net short, and I described it in the morning meeting today as I'm net short, but I'm a bit nervous between the Apple and Amazon reports, which now I just survived through, and some of these important economic numbers that we still have to have happen this week. The big employment number tomorrow for April. A little bit nervous still, but if we can get through that, then I'll start feeling pretty comfortable about the shorts that I have on. That's all I got. So I am happy to answer any questions that you guys have. So I know right before the meeting started, David gave me some, so I'm happy to go through these as best as I can. So it looks like I got 3 questions from David. I'll try to do them one at a time. Question 1, can you go over your morning research routine and how you use the VTF for stocks to trade? Sure. So my morning research routine, I am usually logging in to my trading software anywhere between 4:30 and 6:15 a.m. Eastern time. The first thing I do is I just see how the market's gapping. I have swing positions on every night, so the first thing I do is I just get my bids and offers out per my game plan that I have for my swing positions, and then I start to dive into my research a little bit. So I have a universe of stocks, the names I'm swinging, but like all the Mag 7 stocks, energy names, financial names. I have a universe of stocks where I just look at those charts pretty much every day. Look for key levels, look at how the technical picture has changed. Well, really, before I do that, before I look at any individual stocks, I just start with my analysis of the market, right? Because there's a reason why So I start my pre-market research with analysis of the market every day, and then I start my morning meetings and my afternoon meetings with an analysis of the market every single day before I ever look at any individual stocks. And that's just because I'm a very, very big believer that you cannot trade a stock. Maybe sometimes like a hectic meme stock you can, but generally speaking, you cannot even trade any stock if you don't have an idea of what the market looks like. There's a correlation between how the market trades and how any individual stock trades, especially names that are in the S&P, the Nasdaq, the Russell, on trading on the New York Stock Exchange. So I always want to start with an analysis of the market. I create a game plan for the market where I'm looking at the SPYs, the Qs, the IWM. I'm always starting with daily charts. It's a daily chart technical picture. I'm assessing how we're gapping. I'm creating a game plan. Then I go into the individual stocks. So I have this universe of stocks I go back to very regularly every morning as part of my research. And then in the virtual trading floor here, we typically start getting news in the VTF around 7:30 in the morning or so, give or take on how sleepy Pat was that morning and how good of a job the other awesome people are who are part of our community who help to provide information. And I'm giving Pat a hard time, but Pat gets the props first and foremost. He is the man, and is invaluable to what we do here as a team. But shout out to all the people that help get us information into the virtual trading floor in the morning and throughout the day. So usually, give or take, we start getting research into the VTF in the morning at 7:30 or so, and that typically includes every stock that got upgraded and downgraded, every stock that had an earnings report, every stock that has news. So what I do is, as part of my process, time permitting, every once in a while, stuff's going on. I just can't do it all. But I go through every single stock that gets listed in the VTF. Whether it's because a trader has an idea or because Tate is letting me know potential RDRs and demarks, or Mike Reed's getting an upgrade from a stock in there, or Pat's letting me know about an earnings report. I do my best to type up every single name that gets mentioned in the VTF. And sometimes I've never heard of them. I actually meant to mention this name in the morning meeting this morning that I had never heard of, but I saw that it reported earnings this morning. I looked at the chart and I was like, what the hell is this thing? Has anybody ever heard of this HWM? Homet Aerospace? Look at this daily chart. Look at this daily chart. This thing has been on fire since October 2023. I mean, this was a $43 stock. Look at this uptrend that this thing has been at like pretty much for the life of the company. And then reported a phenomenal earnings report this morning compared to expectations. I had never heard of the company. I meant to bring it up in the morning meeting, and I totally forgot. So, again, I'm taking a look at names I've never even heard of sometimes in the morning. But if it's in play, then there's potential opportunity there, and I want to look through it. I would say if I look at 100 stocks in my morning research, I will probably find ideas that I feel are potentially actionable in 3 to 10 of them. And then of the potentially actionable names that I find, I'll probably only execute on a quarter of those or less. So it's like a lot of work of dwindling down individual names to find what I feel are the best opportunities. I trade a lot. I trade like a madman. You can probably hear, especially when I'm at my Idaho home setup where I have a little bit of a louder keyboard, you could probably hear in the mornings just how hard I'm trading and how hard I'm banging the keys. So I do trade a lot, but I'm actually very selective, especially on what I choose to initially get myself involved in. So I go through every stock. Pat publishes his morning note usually around 8:30 or so, sometimes a few minutes after. His morning note is what is that sound? This is just some crazy wind going on outside right now. Pat's morning note is the best. It is the best. I mean, it just provides it's just an aggregate of such incredible sell side research. All the best stuff is in there. I love reading that. I love reading all of it, but I really love reading that daily Goldman Sachs note that's in there every day that usually gives you like a heads up on the systematics and the buybacks and who was buying and who was selling on the previous day. Love it. Short-term tacticals in there. The beginning portion of the note's great as well. Sometimes it summarizes some pretty good stuff. So just a hugely important part of my research is reading Pat's note, and that's a really big part of how I build out my more macro thesis for the market, because I take a top-down approach to trading. Everything I do, even if I'm just taking a 5-minute day trade, everything comes from the big picture. I don't want to take a trade, a 5-minute day trade, 5-minute chart day trade, if I don't feel that the daily chart is right for it and I don't feel that the market is right for it. So like the small time frame execution time frame charts, it's the last part of the equation. So yeah, you want to find your executable setup on that 5-minute chart, but you got to base it on the bigger picture first. And by that point, it's 9 a.m. I do the morning meeting, and then 9:30 the market's open. So that's kind of the morning research routine right there. Second question is on cores. Did that wedge work? No, it didn't. And that's probably around the time the market failed, if I had to guess. Yeah, it's exactly what I'm talking about the importance of the market. And I think I even said that at the time when you asked about it. But let me read your question. You mentioned it was a momentum trade for a breakout to the upside. What candle was the ignition bar? What candle was the ignition bar that you were referring to? 5-minute chart, yes. I think you mentioned there was not strong volume bar on that. Came in like you typically see on a true momentum breakout. You also mentioned an upward channel, upward triangle, upward wedge would be the correct term, not upward channel. Can you go over how that typically looks and how you look for that specifically? Also, did you put in a buy stop order to get? I didn't take the trade. I just gave you feedback because I think you were asking me about it, but it was not a trade that I was taking primarily because I didn't like where the market was. Also, did you put in a buy stop order to get filled, and what price were you targeting and why? What was your stop loss on the ignition bar? What type of share size would you use if a person was risking $100 on this particular trade? Sure. So just a lot of questions in there to unpack. Candle was the ignition bar you're referring to. Okay, so first let's start with a channel. This is not a channel. This is a triangle or a wedge. Same. It's an ascending triangle is really how I would describe it. An ascending triangle is a pattern of equal highs and higher lows. Typically what it represents is a pattern where there is overhead supply and underlying demand. So the overhead supply, the sellers that are out there, they're roughly sitting at this $885 to $890 area that creates these three more or less equal highs. And then the demand, the buyers are a little bit more aggressive than those sellers because the buyers are willing to step up their buying. So you've got equal highs and higher lows. You got a pivot low here at 940. You have a pivot low here at 1020. You have a little bit of a pivot low here at 11 o'clock. So those are the pivot lows as the buyer is stepping his way higher. The market is also moving higher at the same time. So I think that you asked me in real time, and I appreciate you asking me this in real time. If I were to trade it, how would I trade it, and where would I put a stop loss? So basically, when you are trading an ascending triangle, a channel, by the way, is like an uptrend. So I was actually talking about channels a little bit to Richard. This is a channel right here. So a channel is basically an uptrend where you could draw lines. I don't really ever draw lines on my charts, but you could draw I don't know, this line here, and you could draw. How do I do that again? Boom, and you could draw an upper one, kind of like that, basically. So that's like a upward channel where you're just basically connecting the higher lows and the higher highs with some lines. And I'm not a big chart drawing person. I don't draw all over my charts, but I can just see this conceptually. I don't need to. And whatever, my lines are a little bit sloppy, but you get the point. So that's a channel. And one thing we were talking about, and if Richard's listening, this helps you as well. Sometimes actually the way to break down on a up channel is to actually have it break out first. Because usually if you break above the resistance line of the upward channel, you have a stock that's going parabolic and it becomes unsustainable. And a lot of times that's the last leg of the up move. You're moving higher and then you break higher and you squeeze higher, and then that's the last leg of the up move, and then you actually get the real move lower that you couldn't get because there was just a strong underlying bid to it. Let's see if I can delete them. Cool. Now going back to cores. So cores, again, is a ascending wedge or an ascending triangle. We already described the supply and demand dynamics of it. So basically what you want to do is you want to just buy the breakout of the pattern. So if the resistance is like 885 to 890, you want to be buying, 885 to 890 when the pattern has reached its maximum amount of tightness. And when you asked me about it, I think you asked me about it before 11. So we didn't have, this is like the real attempt of the breakout here is at 11:10. And this is really the last pivot. So my more ideal buy on this actually would have been buying like through these highs, like buying 889, 890. If I were to take the trade, which I wouldn't take this trade because of the market, and I can circle back on that in a second. But if I were to take the trade, I would have a buy stop at 888 or 890 is how I probably would buy it, because this is a momentum trade. I'm buying a high price expecting to be able to get a higher price as a result. And then the stop loss that you can use, you could use, so this would really be the ignition bar here. You do actually have a little bit of an uptick in volume. What I was referencing earlier was this candle here at 1045, because you had like a little bit of resistance in front of the bigger resistance at 850. And I was like, you could kind of call this like an ignition bar. If you wanted to keep it really tight, you could use that low. But as you can see here, that this candle here at 1045, it just has no volume confirmation at all. So I really don't love it. This candle here at 11:10 at least has a little bit of a volume uptick in it, and that's at a time of day after 11 when the volume should be slowing down. So that's better. So I like, when you've got a candle that's got a lot of volume on it, provided that volume, and you need to try to know this if you can, you want to make sure that volume is not coming from like one random out of market dark pool print. But as long as the volume is true, if you get bigger volume, that's an acceptable stop loss, because what it means is if the stock ever trades below that low, every single person, and a lot of people were just involved on that bar, a lot of buyers just came in, that's why the volume's big, and this is not a great example, but it is an example. They all become out of the money, and if they're all out of the money, then they have to start selling stock down typically, and you kind of want to get out of the way. So you could use that bar as a stop, or you could use the last pivot low of the wedge. Pivots are important because pivots are the spot where buyers take control from sellers or sellers take control from buyers. So you can see here, like, we can define our like three major pivots within this pattern. The 941, who's in control is sellers. They're driving the stock down, but at the low at 940 at $8.45, the magic happens and buyers take control from sellers, and now buyers are in control and they drive it up to this high. And then this is an important high because it's the price where sellers take control from buyers and they drive it down to this low. This low at 1020 is important, and this one's got a little volume confirmation as well, is important because that's the spot where sellers are in control, they're driving it down for 10 minutes, buyers regain control, and they drive this thing up, they grind it up. Then you get a little bit of a pivot low here at 11. That low is at $8.79. I like pivots because it represents the spot where buyers take control from sellers or sellers take control from buyers. So if you're buying this breakout of this pattern, you could use the low of the bar in which the break of the pattern occurs, especially because there's a volume uptick, or another appropriate stop would really be any of these pivot lows. The best one is probably the most recent one. It's going to give you the lowest risk and potentially highest reward. Sometimes if it's really tight, maybe you want to be a little bit looser with the stop, but generally speaking, that's what you're looking for. Now, I'm not taking this trade because of the market. So, and this is actually everything I was just talking about earlier off of your first question. I take a top-down approach to my trading. I start with the big picture of the indexes, the small picture of the indexes, the big picture of the stock, the small picture of the stock. So the big picture of the stock this quarter's overall looks pretty solid. Tom and the VTF let us know to keep an eye on this stock. Here's a descending channel, right? The break of the descending channel to the upside, the break of the downtrend to the upside. So we've kind of had an eye on this for a while. And I know I called out a long on this thing on April 25th. It worked out pretty well. Pulled back a little bit yesterday, gapped up really big this morning, I guess with the market and everything else. So I don't hate the idea looking at the daily chart of being long versus the previous high on the gap up. So that would mean being long versus $8.45. So another way that you could trade this thing is off the daily chart, right? Or the daily chart is saying, hey, I want to be long this stock as long as it's above $8.45. And then the 5-minute wedge is telling you the when, where, and how to actually be able to buy it. I like that idea. You're going big picture down to small picture. Sometimes I'll just buy things and I'll use the daily chart stop. I won't even use the intraday chart stop. I'll give it more room. Sometimes I'll buy something and I'll use 2 stops or 3 stops with a more complex game plan if I have enough share size. I might use the low of the 5-minute initial bar, the low of the pivot, and what I feel is the daily chart stop down at $8.45. If you're going to give it that much room, you better be planning on swinging it if it closes well in your favor. All right, so I got a 5-minute chart pattern that looks pretty good. I got a daily chart that looks pretty good. Why don't I like this thing? Because of the market. I said it in the morning meeting. That's why I would take a top-down approach to stocks. Why did your trade fail today? Why did cores fail? Nice looking break of this pattern here at 11:10. What time is the high of the market today? 11:15. That's one of the biggest reasons why this thing failed. And if you're listening to me when I was on the virtual trading floor on the radio and we were grinding higher, I was saying, sometimes we see, just in a vacuum, if you couldn't tell me what the daily chart looks like, and I could only look at a 5-minute, I'd go like, wow, this looks really bullish. Like we might really continue higher today. But then when I think about the daily chart factors, I do not like longs I don't like longs at this price, right? When I'm looking at the SPY or the QQQ, and I say I don't like longs at this price, that means I don't like longs in anything at this price, unless maybe, here's the only asterisk, a stock had an earnings report or had news where the earnings report or news is so powerful. It's such a powerful piece of information that it overwhelms the correlation that it would normally have to the market itself. But outside of that, I'm looking at the SPYs this morning into where we gapped up, and I'm saying in the morning meeting, and I'm saying throughout the trading session, I do not like longs. So what does that mean? Does it mean I'm buying a good-looking daily chart in cores with a good-looking 5-minute chart in cores? It means I'm not buying a good-looking daily chart combined with a good-looking 5-minute chart in cores, because if the market pulls back, which I expect that it will because it's day 8 to the upside with extreme upside extension versus the 80-minute short-term tactical in the red, like for the 4th day in a row, even though technically closed outside of it, I'm just not taking it long. And that's where that comes from. So that is, I think, answers almost all of your questions except the size question. So the size in question, again, it's just, you gotta just do the math on it. If you want to risk $100 and you're gonna buy $8.90, which stop loss are you using? I gave you multiple options. Let's say you use the pivot low of 11 o'clock. That pivot low is $8.78. You're buying $8.90, so the low is 79 cents. It means I'm going to have my stop at 78 cents. So you got 12 cents worth of risk before any potential slippage on either side. If I want to risk $100 in the trade, I'm probably going to take 800 shares. Finally, your third question. Do you have other momentum breakout strategy examples you might can find to review over for us? I would like to know your process on what exactly you are looking for when you're looking at a stock for a momentum trade setup. Example, if you're looking at the level 2, or if you could just walk us through the process on what you're looking for. So I basically just did that. I'm going to stop the question there, and I'll finish it, but let's just stop the question there. So I just went through the entirety of the process of how I would trade a breakout off of your cores example. I don't have any good examples of breakout trades today because the market didn't break out, right? The market was not like a breakout pattern setup itself today. It pulled back very heavily, so you're going to be hard pressed to find any actual upside breakouts that you can utilize as an example on the individual stock perspective. But I think that the cores example was good enough. I went through the entire process. Am I looking at the level 2? No. I mean, yes, but no. I don't like the idea of new traders staring at the level 2 tick for tick. It's only going to set you up for bad habits. I know your entrance would be before resistance or support. Well, if it's a breakout, you're buying the break of resistance. So I want to buy resistance. Or if it's a breakdown, I want to short support. Depending on up or down move and what kind of volume bar you're looking for, you could even say, I would do a buy stop at this price if going long on a stop loss at this. So we just did this with cores again, so you can use that as your example. I just want to make sure I fully understand it the best I can, so I can start looking for those moves in a stock to trade it. Also, when you set a stop loss on a type of trade, are you using a market order in the platform? Yeah. So if I'm setting a stop loss, my stop is a market. It's a market stop. And outside of that, I think we kind of covered everything just with the cores example itself. So I really hope that helps. All right, scrolling down here on the VTL, let's take a quick look at Apple and Amazon. Let's get an update on those. Apple weakening out a little bit further. Amazon not doing too much right now. All right, scrolling through the VTF. We talked about Elon already. Way too much fake news recently. I'm not sure what the Apple implied move is. Not a trading question, but a few weeks ago, you mentioned some of the vitamins you take, but left out a few. If you're okay sharing, would you mind giving the full list? There's definitely some edge there too. So I haven't been able to fully research it or purchase it yet, but the first thing I would say is that Robert, who's usually listening in on the YouTube, sent me a really nice email to let me know about something called a GMT test, which I guess is called genetic methylation test. And I think if you take those tests, it'll help you have an understanding just of how well your body like absorbs the vitamins that you're taking, and an idea of probably the dosages and things like that you need to take. I have not. I looked into it a little bit, but haven't jumped the gun and actually done that yet. But that would be something to maybe do. I have had blood work done on my own in the past, not in the very recent past, but I have had blood work done on my own, where I just got a full panel done of my vitamin D levels and pretty much everything that's in there, just to have an understanding of what I was deficient in and what I wasn't deficient in and all that fun stuff. And based on that blood testing panel, and I've been supplementing and taking vitamins pretty much my entire life. I'm a big believer in supplements. Based on that, I was pretty solid. So I feel like my routine for me has been pretty good, but it probably would still be worth it for me to do this GMT test. But I take a multivitamin. Multivitamins are tricky. You really got to make sure you're taking a good multivitamin. There's a lot of really crappy ones out there, like that. I forget what it's called, like one a day or whatever it's called, with like the rainbow on it or whatever, on the bottle. The company starts with a C. That one's garbage. Not all multivitamins are created equal. So you really want to do your research and make sure that you're taking like a good multi. I take fish oil. Big fan of fish oil. Sometimes I do it as a spoonful of cod liver oil. Sometimes I just take the straight up fish oil. You want to make sure you have a good fish oil that they've taken out all the mercury and stuff that's found in the fish. Vitamin D, supplementing vitamin D is huge, especially if you're in front of a computer all day and not getting sunlight. I take more vitamin D in the winter. I take less vitamin D in the summer. Some of your minerals. So, on top of the multi, I supplement magnesium on top of it. I supplement zinc. There's a lot of different types of zincs. I particularly like the zinc, the one that starts with a P, zinc picolinate, I think it's called. So take zinc. I take like a probiotic, like a gut biome probiotic. What else am I missing? Coenzyme Q10. I take. Sometimes I take resveratrol. Sometimes I don't take resveratrol. I've experimented with what's that mushroom that's supposed to be good for your brain? I haven't been taking it recently, and the name of it is escaping my brain. So maybe I should start taking it again. Lion's mane. I've taken lion's mane in the past, and I saw, though it definitely wasn't impacting me, so I don't know why I stopped because I saw this, but for a certain percentage of the population, it actually supposedly like increases your pain receptors or whatever, so it makes you feel pain more. I have a very high tolerance for pain, so I don't think it's been impacting me. But for whatever reason, when I saw that study of that secondary effect, I stopped taking it, which I probably shouldn't have. What else? I think that mainly covers it. Vitamin C. I'll take some additional supplements of vitamin C, especially if I think I'm going to be getting sick. Yeah, I think that mainly covers it. So, hope that helps. Scrolling through here. From Sherry Ann, what's a vol control fund? So, in the market, as you I'm surely know, there are algorithms that are out there. There is buying and selling that's happening from robots. And those algorithms are based on a trading strategy, okay? And that could be as simple as a trading strategy that I create based off of whatever rules, and I have my algo going potentially. By definition, and this is sometimes an advantage of an algorithm, and this is what people should strive to be towards who are human being traders, is that algorithms have to be rules based, because you can't code an if-then statement into the market without a rule that governs it. And for us as discretionary traders, we should also be similar in that regard. We can be. The cool thing about being a human is that you can be more flexible when the market environment changes. You can change and adjust and pull your strategies, but they should still be rules-based approaches to those strategies that are similar to a robot. Now, there are a few strategies that are out there. The CTAs, which is basically like trend following. The vol control funds, which are adding and reducing exposure based on volatility. And also, what's that third big one? the third big one, Bill? I'm blanking on it. That I feel like I don't look at as much. If you're still here listening, yeah, Centrum. That's that multivitamin that I think is trash. CTAs, vol control funds. What's that third kind of main systematic one that toggles in terms of exposure? I think it's a little bit smaller than the other two. I'm just blanking on it. That we end up reading about, I feel like a little bit less than the other two. No, that's an important one too, though. I feel like levered ETFs are not necessarily a systematic strategy approach, more as they are a no. Come on. Whatever. It'll come to me at a certain point. Regardless, giving a long-winded answer to Sherry's question. So, where are you, Sherry? What are you asking me? So vol control funds are basically a type of, systematic fund. So it's going to be buying and selling algorithmically, and it just does it as a volatility target, right? So they typically are looking at 1 month and 3 month lookbacks of realized volatility, and they are adding and reducing exposure and leverage based on the historical realized volatility. So I don't know if Mike Reed is still listening. If you've got, I know you just posted it like yesterday. If you've got the yes, all of those. Thank you, Mike. If you've got the 1 month look back chart that you had posted, I think yesterday, Sherry can have a quick look at that. So. Come on, this is hard. This is hard to do this every day, all day, and just keep all this stuff in my brain and get it out there. But Mike, if you got that chart, you could post it. I could give Sherry an example of how that 5 and 6% realized vol move from the beginning of April is about to roll off here in the beginning of March, and what that means for the systematic vol control funds, who now in their 1 month look back window, whatever, don't have a 5%, 6% realized vol day anymore. There it is. So I think this is a day or two old. So probably after today or after tomorrow, starting on Monday, we're gonna lose this 4.8% day, and then on Tuesday we're gonna lose the 6% day. And that'll be replaced by whatever number we get on a closing basis on Monday and Tuesday. So if Monday we close up 1%, we are replacing on this 1 month look back window a 4.8% realized vol day with a 1% realized vol day. So that reduces the realized vol data in the 1 month sample set, which then means that they are risk parity. Yes, risk parity. That's exactly what I was looking for. So that reduces the the realized vol in the 1 month look back set. So the vol control funds, because the 1 month look back then has more compressed realized volatility, begins to buy. And how much they buy, it'll depend a little bit on what the new realized vol number looks like, but most likely it's going to be less than a 5 or 6% number. So then we get this data, and a lot of times that data is in Pat's note, that more or less tells us in different circumstances how much buying or selling will come from these systematic funds, like these vol control funds. I read a note earlier today that estimated, and again, we got to see what the variability looks like, but based on what I read, if we get average realized vol over the course of the next 2 weeks at 1%, then we're going to get about $3 billion of buying per day from vol control funds over the course of the next 2 weeks. It's a pretty substantial number. $3 billion of buying is a day is a pretty substantial number. It's market impactful. It's especially market impactful in an environment when we have lower liquidity like we do right now. I think I saw on Pat's note either this morning or yesterday morning that the top of book liquidity right now, I think for the SPX is $3 million when the historical average is $13 million. So this stuff is really impactful, and it's one of the many things that creates like an underlying bid or an underlying offer into a stronger or weaker market. So thanks for the question, Sherry. I hope that helps. For anybody who's new, oh yeah, this is great for who was asking me the questions earlier, who's new on the team, David. David, if you're here, I would recommend clicking on this link that Mike Reed posted, where he has done an awesome job of taking some of these afternoon meetings and just like giving us like some individualized lessons that kind of come from those meetings on various topics. Greg, almost 2% move from highs today in the Qs. Good things come to shorts who wait, I guess. It hasn't been easy, has it? The grind today was real. Nice job, Richard. How do you distinguish between a fake breakout you were talking about and a real breakout? You can't. You can't until after it's worked or not worked. You really never know. I mean, basically what you're asking, the question that you're basically asking me is, how do I know if a trade is going to work before I take it? And the answer is you never know. You can, as best as you can, deduce the probability of the trade working or not based on those other factors. Like I was saying earlier, I don't like that Coors long because of the market factor. That market factor, I felt, made it a much lower probability of success trade than it would have been otherwise. So you don't know if a breakout trade or any trade is going to be a false move or a real move until you see it work or not. And you always got to remember that we work in a game of probabilities. So even if you have a trade that is as perfect looking as possible, it will still have a percentage of failure. And that's why when we are dissecting our trading, we want to look at larger data sets and not make big rash decisions on how we game plan and how we trade based purely off of one example. And does this fake breakout also happen in the other direction? I mean, yeah, you can get fake breakouts in either direction. Sorry to hear that, Tate. I'm bidding stock Apple versus my put spreads. Can't see 200 with that buyback. Yeah, that buyback is sick. All the different things that affect. We have like a great list in here now of all the different things that affect the market. We got levered ETFs, we got gamma, we got delta hedging, we got zero DTEs, we got corporate buybacks, we got pension funds, we got dispersion, we got vol control funds, we got CTAs, and eventually we got risk parity. The S&P trades approximately $18 billion per day. Does that number sound right? I was looking for reference. This is a great question. I was looking for reference. So when we say vol control needs to buy $3 billion or Apple buys back $100 billion, what does that mean? The number that I've always gone off of roughly was $30 billion a day. That on an average day you get like $30 billion worth of buying and selling. So if you know for sure that you're going to get $3 billion worth of buying in a day coming from vol control funds over the course of that 2-week period, that represents like 10% right there in and of itself. So you can just imagine the cushioning impact that can provide. And then you combine that, and on top of that, the CTAs, which I haven't seen a number super recently that I remember. but I think it depends. Obviously, depends a little bit on the tape. But I think in a flat tape, maybe they're buying $1 billion a day this week. I haven't seen numbers yet for next week, but let's assume it's the same. Let's say they're buying $1 billion a day next week, and I'm sure we'll get an update on that eventually. Now all of a sudden we're up to $4 billion. You find out, and I don't know what this number looks like, what the buybacks are every day over the course of the next 2 weeks. Maybe all of a sudden we're up to 6 billion, and now we just took 3 cohorts, and we know from those 3 cohorts alone that might be $6 billion worth a day of buying. So it's not to say that those flows can't get overwhelmed if you get bad news, or you can see long only funds as sellers, and those I feel like the long only funds and the hedge funds I think are generally only numbers because they can be so discretionary in nature that you see after the fact, right? So is it possible? Oh, and you have retail, which retail has just been purely a buyer in the entirety of this down move. So if we come up with some numbers and we say $30 billion a day is the market between vol control, systematic, and buybacks, I'm making this up, we're getting $7 billion a day of buying next week. You have to be able to have enough selling that's coming from other cohorts of the market to be able to overwhelm that. It's not impossible, but it's difficult. So it's not to say that the market can't go down. It's just you got to recognize the cushioning effect of it, and that it makes it easier for the market also to move higher. And then an additional impact on that is gamma. And gamma, we know, really since February, has been flat to negative, which is so interesting because we've been in an environment of, generally speaking, very positive gamma for what feels like years with roll-offs around OPEX. And now we've been in an environment here for a couple months where we've been trading at like flat to negative gamma, which is super interesting. But that also means, right, like we had some times last year of huge positive gamma in the environment, $10 billion of positive gamma. So now let's say we're in a $10 billion positive gamma environment. That means that if the S&P goes down 1%, there's $10 billion worth of buying that's going to go off. So if we combine that with the $7 billion of hypothetical buying that we get from vol control, CTAs, and buybacks, it's like impossible for the market to go down more than 1% in a day. Anything's possible in markets if you do it long enough, but like that's what makes this information and this data so important, and really impacts, I feel like, the strategies that you're implementing at any point in time. Apple estimates $900 million in cost increases on tariffs in Q3. Gross. This seems more accurate based on available data. The average daily volume traded in the S&P can fluctuate significantly. Here's a snapshot of the total dollar volume in the past few days of trading. So that number is more like 300 billion. Yeah, I'm not sure exactly how that's calculated, to be totally honest, and I'm not sure if the right way to calculate it is based on total trading volume, like the dollar amount of total trading volume, or if there's a way to be able to do it that's more like a market impact number. Yeah, exactly. I feel like, and I'm not sure how it's calculated. That $30 billion number originally came from Jem Carson, who I like a lot. He's really, really good at this stuff. That's the person that I heard say that number, and I've kind of been basing everything off of. I trust his work. I kind of have been basing all of this systematic information, everything that we look at, off that number, and I would say that anecdotally, based on my study of the market, really since I learned that, it seems pretty accurate to me. Just when I know everything that I just described about the systematic buyers and sellers and everything and what those numbers are, it seems accurate to me based off of a $30 billion like starting point. But how that 30 billion was specifically calculated, I'm not 100% sure. I don't think it would necessarily be total dollar value of buys and sells. It would be more of like a market impact number, but I'm really not sure. Um, yeah, I can try to. Yeah, let's see here from Richard. I know it's late. Yeah, we're doing a long one today. I know it's late, but could you please talk a little bit about the SIE and the Series 7? I understand those are the licenses. It's Series 57, not 7. Needed, but traders. But how would that help a trader's career as like a CPA for accountants? Um, how would it help a trader's career? I don't want to give a public answer here that's going to make FINRA upset if they ever listen to this, but they probably won't. We're an hour plus in. It's not going to help your career at all. Um, it's not going to help your career at all. The tests are stupid. So you become a proprietary trader, a business that has no clients, and they make you take weeks to memorize rules that impact clients. It's the silliest thing ever. Um, it's just a hurdle that FINRA makes for people to become traders, and I think it's completely useless. I think it's completely a waste of time. They don't apply to the business that we're in, and it's a way for FINRA to make some money. That's my opinion on it. But I can't control the regulatory boards, and I have great respect for them if they're listening. I have more respect if they went after people who said, I got funding secured at $420, but uh, what does it do? It's a regulatory requirement to have that license in order to do certain jobs. So if you're going to be a trader or a quant, you need a Series 57. If you're going to be a broker or a financial advisor, you need a Series 7 and a 63. If you're going to be a manager, a managing principal, you need a Series 24. And then there's a whole bunch other ones that you can take if you're really, really sadistic. So, hope that helps. No problem, Greg. Majority of US iPhones sold in Q3 will be made in India. Majority of iPad Mac products to be in Vietnam. Does the VTF ever do in-person meetups? I might put together something at the end of June in Los Angeles for people that are out in that area. I'm not 100% sure yet. And occasionally we do something in New York. Over to the YouTube. The dog ate my internet. The dog did eat my internet yesterday from Robert. Man, I was just shaking my head last time when I was looking for the new ticker for Square. Having the same thought process. Is Jack still involved? It looks like it. Yeah, and then Square bought out Jay-Z's streaming service just so you could hang out with Jay-Z. That's a fun one. What do I think of Spotify? So I didn't take a close look at the earnings report. Interesting that so I know that they traded it down initially. They bought it all the way back up. I love Spotify. Spotify has so many users. Does anyone know off the top of the head what the monthly active users is or whatever on Spotify? I mean, it's like a quarter of the world. I feel like it's crazy how many users Spotify has. Which maybe that's a bear case. Who else is going to become a user if they're not already? But generally speaking, I love Spotify. They've struggled to monetize at certain points in the past. I think one of the best things that they did that really helped the stock price was to take a step back from the podcast business. Like, they bought Joe Rogan for a lot of money. That probably paid for itself. But then they were, trying to own everybody basically, and like the Kardashians and all these people who I hardly know who they are, that I don't think anybody listened to, and those were just wastes of money. So when they pulled back on that business, the stock started to really take off, and just that user base alone is incredible. I wish they would pay the artists a little bit better. Spotify looks great above 620. From Formula One, starting to think about integrating AI for market data at T3. I'm not sure I understand the question when you're relating it to market data. I can tell you that we have had black box technology at T3 that's been incorporating AI since before it was cool. From Sherry Invest, do I think that UNH has bottomed? Bottom is a big word. Ooh, didn't no. It's already making new lows after hours. So no. I thought yesterday might be a short-term bottom in UNH. But what happens if the market rolls back down? I don't know. I thought yesterday was going to be a short-term bottom that was going to lead to a bigger bounce, and I'm looking at it right now, slightly below yesterday's low. So clearly the answer is no. I would keep an eye on it because it's oversold. And it should be due for a bounce back. That's why I thought it could bounce off yesterday's low. From GBS, do you set alerts at the price level you are interested in, or do you set limit orders? It depends on the situation. I do both. If it's a trade that I'm already in, then I set limit orders. If it's a trade that I'm not in, I sometimes use limit orders. I sometimes use alerts. It really depends on the situation. I find alerts annoying, specifically at the open, and by the time I type in the ticker, the price has moved from them. Yeah, I've had that experience as well. From Robert, follow Gary Brecka, his podcast. He is breaking down how to become a top performance person. Cool. Yeah, Lion's Mane, that was the mushroom. Thank you, Formula One. From Steven, I hope you're feeling better. Really missed the afternoon meeting yesterday. It was such a crazy day. Yeah, sorry about that. I was feeling fine. I was aggravated yesterday generally, but the main reason I was aggravated was because my internet dropped right after the close, and it was just too hectic. I couldn't do it. Yes, they do. No problem, Richard. If Netflix dominates video streaming, Spotify is the undisputed leader of audio with over 260 million subscribers for a 35% of the global share, which we calculate could expand to 400 million premium users by 2029 out of a total of 1.2 billion global streamers. The company has a long growth runway left with the higher product innovation and lower competition. It can potentially exceed this milestone. Thank you, Bill. Yeah, a lot of users. I'm a Spotify premium subscriber. All right. I am hopping off right now. We got Amazon on tariffs. Obviously, none of us knows exactly where tariffs will settle or when. We haven't seen any attenuation of demand yet. To some extent, we've seen some heightened buying in certain categories that may indicate stocking up in advance of any potential tariff impact. We also have not seen the average selling price of retail items appreciably go up yet. Some of this reflects some forward buying we did in our first party selling, and some of that reflects some advanced inbounding our third party sellers have done. All right, I'm going to wrap it up there. Have a great night, everybody. See you all tomorrow.